Hello and welcome to another episode of the Investor Financing Podcast. I'm excited today. We have Tony Castronovo. Got it right, maybe? He is the founder and managing partner of Novo Multifamily Group, LLC and Novo Investments, LLC, a real estate investment company established in 2014. Welcome to the show, Tony.
Thanks, Beau.
All right. So Tony's been in real estate since 2014. I'll give you kind of the high level of his background to make it easy on everybody, and he doesn't have to keep on answering the same questions. He started in the fix and flip space. He would buy wholesale deals. He's got a background in construction management, and his previous career was management consulting. He's got an education degree in engineering and construction management. So my mind reading this before I went live with you, I knew, okay, this guy's probably pretty good with spreadsheets. He's probably good at managing renovations and construction and so forth. So probably, as you were working, you started doing your side hustle was flipping properties. And then after a while, I'm guessing this part, after a while, you're like, holy cow, I don't want another job. I'm trying to retire or quit my W-2 job. And then you said, there's got to be a better way. You probably got a mentor. I don't know who that one is, but who was your big kind of mentor, which I'd like to always ask people that just to see who you learned initially from. And then you did your first deal, which you didn't syndicate. You used your own money and maybe some friends and family money. You bought a multifamily property. Why don't we kind of start the show? Well, first, I'm going to welcome you and say hello. And thanks for joining us. Tell me about this first multifamily property you bought and what was the differences from going to house flipping to this multifamily, and just like the framework, was it a 20 or 30 or 40 unit? And so forth. And walk us through that first deal you did.
Thanks for doing your homework. That was a very good lead in. I think by and large, that's really how I got started. I mean, you mentioned about flipping. I had done a little bit of flipping, but mostly we were picking up homes that needed renovations, really to have a single family rental business and hold those properties. And so we had established a small portfolio of homes, and it was always, one more home every 3 or 4 months. From there, we started kind of looking at, okay, we're going to approach 10, and now we're going to start to get into more creative financing with portfolio loans and so forth, and kind of hitting a reset button with Fannie Freddie. So at that point, we just started thinking, you know what, we really want to scale. And how do we get from 8, 9, 10 to 100, 1,000? And so really started getting educated on multifamily. When I bought that first multifamily, it was 20 units. And the reason for 20 was I was looking to buy it with my checkbook. And I was just trying to buy the biggest apartment complex I could afford. I didn't know anything about syndication or, leveraging other people's money, as we like to say, right? So I kind of drew a radius around Houston, which is where I'm located. And because I was always hands-on with my single families, I wanted to be within, say, a couple hours drive. And that kind of narrowed in my market that I was looking for. I already knew my price point. So once we started looking, then, a few popped up and we chased them, and we actually 1031 into the multifamily. So I was kind of sitting on the sideline, with my funds in escrow from the sale of my single family portfolio, just waiting to close on one of those 3 properties that I identified back in March of 2018, I guess it was.
Very cool. You bought the 20 unit property, and did you self-manage that?
I did not. I used that as an opportunity to take a step away and not be that hands-on from an operations standpoint, and actually pull in third-party management. So I started working with property managers and vetting PMs and really trying to understand, what I wanted in a property manager. It took a few, kisses of the frogs to find the prince, so to speak. But over time, I think I really narrowed in on what I was looking for. And that's all we've done now. I mean, you can't self-manage, several hundred units by yourself, whether you have a W-2 job, or not. That's just too much.
So from 2018 to today, you have roughly 800 units, give or take. So you scaled really quickly.
You are right. So it kind of went a little bit of like a hockey stick, right? So the 20 I picked up in the summer of 2018, and I operated that for about a year before we acquired our second property, which was a 60 unit, and we syndicated that. So in that 1 year time frame, not only was I learning about multifamily and how it's different than single family, but I was also learning about syndication. And so I just absorbed as much as I could. I went to a lot of local meetups, and then I brought on a partner who I knew was very well versed in syndication, really more or less a balance sheet partner, kind of a key principal KP, but still gave me some mentoring and guidance on how to syndicate, what I should expect, and so forth. And yeah, what we didn't know at that time, but we syndicated that first deal. And then you hinted on mentoring. So back in just last year, actually, back in the summer of 2021, I finally buckled down and knew that I needed coaching and that it was going to cost some money to invest in myself. I joined a program, the Jake and Gina Wheelbarrow Profits Academy, and that was my hockey stick. That just allowed me to meet people and have folks hold me accountable and learn a ton really fast, but mostly just develop good partnership relationships with others. And that's just made a world of difference.
There's a lot of good guys in that organization. And so that's great. So is that partner, the KP, has he been, or she, have they been in every deal you've done, or did you branch out with other partners, or are you kind of joined at the hip now?
No, it's the latter. So great experience. That partner was somebody that I just knew for, 20 years. We were both in the consulting space for many years. Then he got into multifamily a little sooner than I, and I was kind of in the single family space as we were kind of moving through our real estate journeys together. And we decided to partner up on that particular deal. I continued to learn a ton from him. And then from there, I just started really looking at other deals with other partners, and not necessarily because anything was good or bad with that partnership, but there were a lot of other strong deals out there, strong partners, and I wanted a chance to be working with some other people. And frankly, that's just kind of where I'm at in my journey. Is it's not like I have a company of, several dozen or 100 people. It's a small company, and I'm working with a variety of partners, kind of in the dating phase a little bit to see, really who I like to work with and continue to work with, deal after deal after deal. And, sometimes I think when you're working with people, working with teams, you got to jive on work style and philosophy and mindset. And it's not just who brings a deal, right? Still dating.
Where are your skills as far as are you like the go-to underwriter, or are you like raising capital? Where's your strongest kind of skill set within this syndication team?
I am good with Excel, as you pointed out, but that's not where I want to be. I enjoy fine-tuning and pulling levers, underwriting models, but I don't enjoy all the work that goes into putting one together. To really evaluate a deal, it can take a good bit of time and research and chasing after things, making phone calls to, a variety of folks, brokers, and so forth. That's just not what I want to do or where I feel my time is most valuable. For me, I love being out there working with investors and developing relationships and pitching deals, building partnerships, and capital raising is something that I do as part of every deal. I feel that's a skill set that I've developed and I want to continue to develop. But I can fill the role of an asset manager on deals, but when it comes to the operations, that's not something I enjoy. I want to stay as far away from tenants, toilets, and trash as I can. But I do like the other side where you start doing, the construction and the rehab and managing contractors and vendors. That all is exciting to me. I love the transformation properties. And of course, anything having to do with finances and managing the budget, that's right where my skills line up.
That's important, right? Because construction and timelines are the biggest problems, and especially when you're back in the rehab business, right? Like that was always the pain in the butt. Is being able to manage contractors and jobs is very difficult. So it's good.
Yeah, it is.
Have that skill set.
It is, and it's not just supply chain and negotiations, and it's not even that so much. It's just you have a different mindset. When you're working with contractors and you're literally down there, on site in the trenches, it's a different world than kind of being several hundred miles away and just, paying invoices. I think the background that I had in construction when I first started in my career gave me the ability to really just kind of talk the talk with contractors and understand kind of how they run their business and how they like to be able to work so that they can put food on the table.
And with the market being where it's at today, interest rates rising with, war, COVID, We had a kind of interesting 2 years, and it became like this huge explosion where you would have thought everybody in the beginning was worried, but actually housing and rent rates went through the roof. But now we're kind of in like unknown charted waters right now. So there's still a shortage of housing. Where's your focus? Is your focus still in Texas, mostly in Oklahoma as a secondary market, or what markets are you actively looking at deals in?
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day.
So I actively pursue Houston, San Antonio, and Oklahoma City. I work with a lot of folks, even just across Texas, so Austin and Dallas, but I'm not personally chasing anything there. I'm just relying on partners to bring deal flow in those cities. We will look at some secondary markets, but it's just got to fit. It's got to be right. There's got to be a reason for that secondary market. And even outside of Oklahoma and Texas, I will certainly consider other deals in markets that I believe in, but I just can't chase everything. I can't have intimate domain knowledge of those markets to be competitive. So I'm really going to rely on partners for that.
Got it. Are you now full-time real estate for a while? How long have you not, or are you still working your W-2?
I am officially full-time in real estate. Yeah, I say that because it's somewhat new. It kind of started back in September of last year. And I say kind of because it was one of those COVID and the pandemic. It changed things for everybody in different ways, and some for the bad, some for the good. I think for me, without going, too far back, let's just say a year or so ago, I started sensing that business was contracting. COVID was forcing some dynamics out there in the market that companies had to scale back. And I felt that I might be in a position where I could lose a job. I mean, I was very well respected where I was working, but kind of at the top of my salary band. And really, to get to the next level, it wasn't a place that I aspired to be. I started looking for a different job just to kind of cover myself. And I took something that was a bit of a risk. It was something I knew pretty quickly was not for me. And thankfully, that was something that as soon as I decided I was going to part ways, I just said, you know what, that's my sign. That just tells me that I've got to give this real estate thing a chance. And I talked to so many colleagues and partners and friends that are in this space and they want to do the same thing. And everybody's got their timeline and, oh, not yet, not yet, not yet. To me, I think I was right there. I had the gold handcuffs. I had a great salary. I just kept increasing my salary. I was getting bonuses, the benefits. It was hard to leave that. I just had to say, you know what? There's never going to be a good time. So I'm going to bet on myself. I sold a property. I sold that 20-unit property, my first multifamily. And instead of 1031ing that into something else, I just peeled off a year's worth of salary. And I just said, you know what? I'm going to pay the tax, peel off a year's salary, give myself some runway to grow my business. And I haven't looked back.
That's awesome. Everything happens for a reason, right? And now you're able to, with the cash flows and payouts, you're able to sustain your lifestyle. And from here, you grow and grow and grow. And now are a lot of people coming to you for mentorship? They're like, hey, I want to do what you're doing because I want to do my own thing. I think that's a common thing that why people love real estate. They want the freedom. They want the time freedom. They want to create legacy. And that's, you're not going to do that work, usually working for somebody else.
Yeah. So the answer to your question is yes, and that's really what I used to love that in consulting because I worked for some very great companies and great teams with great people. And that was always something that I felt was part of my role was to coach and mentor other people. And that's just a natural transition into real estate. I'm surrounded by people who want to do the same thing, who are doing the same thing. And so that's the part I get excited about. But I think as far as, making that jump, it's really, to me anyway, and hopefully, for a lot of people, if you really stop and think about it, it's not about just the finances. and trying to develop this enormous wealth and, be on cruise ships every month, for the rest of your life, in your golden years. And it's not what it's about. It's about designing a life, designing your lifestyle that just fits where you're at and be able to financially support that. And I shared with you before the interview here, last month, my wife and I, we decided to take a 15-day trip out to Colorado and Utah. We took our dog, we took, the truck and just got in the car and went. We stayed in a few different places and it was kind of a working vacation, right? So it wasn't like we just vanished for 15 days and don't bother me, we're shutting it all down. We said, we got to keep things moving, but we also want to enjoy what we're doing. We can work from anywhere. So I was basically raising capital from a cabin in the woods in Colorado. I was running my deals and doing everything I had to do. I could do it from anywhere. And then, people were asking me about the dog. Another mission that we had in that trip was to find a place to put under contract to have a short-term rental that we could eventually call a place of our own. And so we took the dog with us everywhere we went. And, the dog went on showings and the broker said, well, that's kind of impressive that you're doing that. And I said, she's part of the design. That's our life that we're designing. She's the vision. We're kind of crafting what we want to do and just trying to fill in the pieces of how we make it happen.
It's always good to hear. I think the importance really is, it's not the, these big, making hundreds of millions of dollars, all these people you see on social media. It's really like just the simple things, which is creating enough legacy cash flow, recurring revenue, where, hey, most of us, we all like to work. We all work hard, but we also want to be able to work on our terms, which means taking our laptop, going and working from a cabin in Colorado or Utah. And it's always been appealing to me. And that's why a lot of people get into real estate entrepreneurship, because it's kind of a tried and true business that has created more millionaires than any other business out there. And I always look at it like, if I were to go work a job and just save money in like a mutual fund or something like that, or just people put money in money markets, it's like, you're never going to be able to retire. You have to save up so much money. And whereas when I found real estate, I go, wait, I can buy this duplex for $100,000. It gross rents are $1,900. And that means, maintenance and vacancy and turnover and all that good stuff. This unit or this property will pay me $600 net per month. And that's for the rest of the, hopefully for a long time. Then you start saying, okay, this is great, but really, if I want to get to that, net income of X, I need to do this faster. And then you think multifamily, and then you do a multifamily deal. And then you think, well, there's a lot of people that are making like 1% on their money and they're just sitting there. What if I could get them a 7, 8, 9, 10% return? I'm doing them a favor. They help me grow my business. And that's really what syndication does. It's like, hey, hopefully we're going to get you a really good IRR. This is what we're expecting. And so that's why people invest into these deals, these limited partners, because it's like, where else can you get? If you find the right operators to invest with, they're going to protect your money, one, and then they're going to hopefully grow your money, where passive investors usually don't have the time because they're busy doctors, lawyers, attorneys, professionals, salespeople. So syndication really makes sense. I mean, after doing interviews with a lot of people in the syndication space, you kind of realize why a lot of people get into that business. I always think this too. Once you have enough cash and you don't really want to work as hard, what do you do next? You actually go back to being a limited partner and invest with the best, ponies. And then it's all the work and up, it's all on somebody else. I think that would be like a really good place to be. It's just, and not have to be an active partner in the deal is also, when you get to a certain point in your life, that's appealing to me too. Like, okay, that's actually a true passive investor, right? That's a true passive investor, because even the sponsors are the ones on the line. They're the ones that got to sign for the debt. They got to make sure the deal goes smoothly, right? And that's why they're the general partners, the limited partners. So it's a very interesting dynamic, and your story is it's good. You're like the guy next door, hardworking, smart guy, corporate world, and like, okay, there's got to be a better way. Got into real estate. You knew that was the ticket. And then you just realized that multifamily might be the place to go. What other asset class besides the short-term rental that you're buying right now? would you ever look at in the future, would you think? Or you're just not into any other asset classes?
I think I would look at something like self-storage. I think it's maybe a good sort of sister asset to multifamily because it's almost like a cross sell, right? If people are mobile and moving into apartments, they need a place for their stuff, and you can never have enough storage. And I see all the value in that model, but I'm not really chasing after too many other asset classes. For me, I just want to be the best I can be in one thing and do it really well. And, if I've mastered it and I get bored with it, well, then maybe I'll move off and start looking at something else. I'm a little less concerned about something like diversification when it comes to asset class. I mean, there's a lot of ways to diversify, right? Markets and asset class within multifamily, ABC, that's another way to diversify. I think also your point about limited partnership. I mean, so I am an LP in deals and I'm a GP in deals, and I've had my own deals. And eventually I think I'll also KP deals. To me, that's the top of the food chain, right? Where your wealth is able to generate more wealth. That's an aspiration where you can truly be passive and your money is making more money.
Finaling out our conversation, what do you do on a daily basis for personal development, kind of keep you sharp and keep you motivated? Do you have any rituals or anything that you do daily, podcasts, or what do you do to kind of keep yourself at a high level?
A lot of stuff. I mean, so I'm very active in the Jake and Gino community. It's people doing great things every day, and they constantly motivate me, and I'm constantly having calls. And for the first few months when I joined the program, I was literally tracking how many calls a month I had with people from the community. The first 3 months, I talked to over 90 people, 90 unique people. I had multiple conversations with them. I was developing relationships. They were inspiring me. Back in the consulting days and early in my consulting career, I was into a lot of professional development and reading a lot of books. And then I kind of let that, I guess, wither away a little bit. And so I set a goal for myself in 2022 to read a book a month and just, spend more time to invest in myself. That's what I've been doing. I've been doing that since about October of last year. And it keeps me accountable. So every day I try to read 30 to 60 minutes. And whether it's, lunchtime or first thing in the morning or in the evening, I just try to make that a habit. But I'm constantly listening to podcasts too. A lot of my colleagues from the community, they're doing things like what we're doing here. And I like to support them. I like to learn more about them and keep growing those relationships. So I'm just absorbing everything that they can do. And then also another goal of mine for this year was I said I was going to start a local meetup. And so we're well into that. And we started an organization called Main. So we like to call it the Main Event. And Main stands for the Multifamily Apartment Investors Network. And it's an in-person meeting in the Houston area, west side of Houston. Invitation only. We really try to cater to an executive audience, kind of that accredited investor, and bring the right content and the right relationships to those sessions. And it's been great.
Awesome. Yeah, I used to, when I lived in the Bay Area, I had a meetup. It wasn't on multifamily. It was just in general real estate investing, but I miss that. I do. So I got to start. Now that I live in Las Vegas, I got to do something out here. But well, this has been a great interview. I really appreciate your time. Where can people follow you, find you? Where do you like to send people so they can, subscribe to your newsletter or anything you have, where they can track what you're doing, look at your deals if you ever need some high net worth accredited investors that are listening on the show?
Oh, we can always use that. Yeah. And so they can reach me through my website, which is novomultifamilygroup.com. I can also be reached via email at tony@novomultifamilygroup.com. I'm also on LinkedIn, and we've got both a personal and professional page. So anybody can reach out and connect that way too.
All right. Well, thank you for sharing your epic journey, and we wish you continued success. And hopefully a year from now or so, we can get you back on the show and get an update of what's happening, because I know it'll continue to grow for you. So thank you for joining us.
All right. Thanks, Beau.